Hey, everybody, welcome to the morning market briefing Monday, August 15th, 2022. Hope you're doing well. Hope you had a good weekend. Guys, good weekend.
Good weekend.
Decent.
Decent, good. Mine was fine. I hope everybody out there is doing well. Kind of a light day today, which I wouldn't necessarily say I'm real upset about. But as we get kind of a quick pulse check on the markets, Dow futures down about 0.5%, S&P futures down about 0.5%, NASDAQ futures down 30 basis points. Oil kind of taking it on the chin, at least right now, crude down about 5%. So that's kind of where we are as we get started. We're going to open up with discussion on China. They're cutting interest rates, lowering the 1-year and 7-day lending rates by 10 basis points to 2.75% and 2% respectively. Still just really struggling to get out of this hole. Tom, rate cuts. Are you surprised by that in China? I mean, I don't know that I am.
I mean, I think they're really struggling because they're really the last bastion of mass lockdowns. Economic activity can basically just be turned off at the drop of a hat over there, and has been multiple times in the last 2 years. And I think that's had a real effect on their economy. So it's not a huge surprise. I think that they've got a little bit more of a different situation than perhaps the rest of the world, where, soaring inflation and supply problems are the issue there. It's really more a factor of economic slowdown and lack of productivity. Though it looks like they're being very productive in the Strait of Taiwan. But other than that, it doesn't look like they're doing much. And so I think they've also probably lost out quite a bit of business of people shifting their supply chains elsewhere. And I don't think that has a net positive effect. But I mean, outside of Turkey, China might be the only country I've heard of cutting rates in the last 6 months. And so you can tell that their economic activity is markedly different than the rest of the world.
Yeah, it's interesting just, thinking, we've talked kind of about the tone of just this Cold War-esque standoff between the U.S. and China. And then meanwhile, economically speaking, policy could not be any different, more different.
Yeah.
For now.
Now. Yeah, maybe they're just ahead of us. Energy continues to be a concern, specifically over in Europe. Germany has introduced a 2 to 3 cent kilowatt hour levy on energy usage. This would equate to essentially 400 to 600 pounds for a standard family of 4, according to the projections of additional cost on energy. They're trying to pass this through to the end consumers. Ben, this is a challenge that's going to probably persist for some time. They're expecting this to be in place from October of this year through April of 2024. What impact do you think this has, other than just costing a little more to have energy, which was kind of what was going to happen anyway?
Yeah, I think when you actually look at the numbers, which would amount to about maximum 50 euros a month for a family of 4, I think that it's very easy to look at that and say, man, it's actually not that much of an impact relative to what we thought it could be. So basically what they're doing is that they're sharing some of the additional costs of the Russian gas, so that these utility companies don't go bankrupt. But the German government already is supporting these companies. So the utilities and the Russians, they're getting the money regardless. It's just, how is it done? Are you going to put a levy in place, or are you going to run a deficit more? And I think that they're probably leaning a little bit more onto the deficit side, because this is not going to, in my opinion, really solve all the problems there. I would say from the economic point of view, it's probably a net positive, because you have a little bit more deficit spending, and you also have the cost being shared between households and the industrial sector. There was a thinking that it was all going to be on the industrial sector and not as much on the households, but they're definitely sharing it between the two, which means that I think that the industrial sector could hold up a little bit better than expectations. However, expectations were extremely low to start with, and this is not to say the industrial economy is going to grow rapidly. So that's what I would say. I'd say probably a net positive relative to expectations, but Germany's still in a tough spot, and I wouldn't be surprised to see if levies get increased, especially as we go into the winter.
Yeah, I would expect that as well. We are seeing oil prices fall, as I mentioned a moment ago. Crude down about 5%. Biggest driver here really just concerns about global growth, especially in China, per the topic we just discussed, concerns in Europe as we're discussing. But we are seeing some strengthening of the US dollar as well. Ben, any big takeaways on the oil space? Do you still like the energy space from an investment standpoint?
I think that it's still quite interesting. I think the big thing that's just weighing on things right now is global growth. Europe and China definitely don't know where those economies are going, but especially with the Chinese data that we got over the weekend, it seems like China's going to be consuming less oil going forward. I think that this is probably a net positive for consumption here in the United States, and it could help the inflation narrative. The US dollar is strengthening as well, so oil is priced on US dollar, so that's a headwind as well to energy prices. But I think over the long term, I think that we need energy, and not only just oil and gas for energy, but also oil and gas for all of these hydrocarbon-based products like plastics and chemicals and all these other things that really power our world, semiconductors, all these things rely on hydrocarbons. So I think that the oil and gas space is still an interesting space to be in, but you have to pick and choose where you want to be in oil and gas. And I think that's the critical leverage point.
Couple other geopolitical stories. Putin has sent a message to North Korea, and this sounds kind of like a McKinsey consultant wrote this for him or something. But the two countries will, quote, continue to expand the comprehensive and constructive bilateral relations with common efforts. That's consultant speech 101, basically saying let's be friends and let's stay friends. North Korea does have a number of connections to Russia. Ben, how would you kind of explain the link between these two powers other than both kind of being bad actors?
Frankly, I didn't really appreciate it before how closely they were linked. So they do have a rail connection, which is notable, but also North Korea has recognized, is one of the very few that's actually recognized the independence of Donetsk and Luhansk, which are those regions in eastern Ukraine that the Kremlin has basically tried to annex, although for now it's independent. I think that vote's coming up in about a month or so. And then, but also North Korea has pledged to, there's this thinking that North Korea has actually stockpiled a ton of weapons for Russia and for use for Russia. So I think that it's going to be something that's very interesting to watch going forward, because they do seem